Good morning, ladies and gentlemen. Could I ask you to take your seats and we can start the conference. My name is Peter Kemp. I'm the Editorial Director for Energy Intelligence here in London, and I'll be your host over the next 2 days. First of all, welcome to London and welcome to Oil and Money. This year, navigating the shifting energy landscape. First of all, a few housekeeping notes. Can I ask you please to turn your mobile phones to silent? A second, health and safety note. This is to do with familiarizing yourself with the emergency exits, the green signs on the side and behind you in the unlikely event that there is an alarm, a continuous alarm followed by a recorded message will indicate the need to evacuate the building immediately. Leave by the nearest exit and go to the assembly point, which is located outside the Sheraton Park Lane Hotel on Piccadilly, just down the street. Instructions are in the conference book you were given at registration. And note, there are no planned fire alarm tests today. So if it goes off, it's real. Also, there have been a few last-minute changes to the agenda, which may be a little bit different from what you have in your folder, but there's a printed handout which you should have received at registration, which will update you with the latest information. That leaves only for me to hand over for the formal opening of the conference, and I'd like to introduce, as our first speaker with welcoming remarks, Lara Sidawi Moore, who is the Chief Strategy Officer and Chairman of the Executive Committee at Energy Intelligence. Lara.
Your Excellencies, distinguished guests, ladies and gentlemen, it is a great honor today to open the conference on behalf of Energy Intelligence, our long-established partners, the International New York Times, and our esteemed sponsors. I would like to welcome you all to the 35th Oil and Money Conference. We are delighted that you can join us from all corners of the world to participate in what promises to be an impressive global agenda. The focus this year is on developments that are triggering the biggest questions and decisions, change, hence navigating the shifting energy landscape. As Jean-Baptiste Alphonse Karr once said, plus ça change, plus c'est la même chose, usually translated as, the more things change, the more they stay the same. Ironically, this couldn't be closer to the truth than the current climate. The scale and pace of change over the years has been phenomenal. Yet there are striking parallels with what is happening in the oil and gas world 35 years ago at the time of Oil and Money's first anniversary. Some notable ones, and you can see more in the reprint of the 1980 Petroleum Intelligence Weekly, that can be found in your conference materials, include: in 1980, the Middle East was in turmoil and Iraq was in a state of war, as it is today. Iran, a critical player then, as it is now, with its oil production constrained, adding to supply disruptions that the market had to contend with. OPEC, very much in the spotlight in 1980, and today, with all eyes on it, wondering if it can balance the oil market. While there are parallels to be drawn, there are also important differences. These generations that highlight how much the oil and gas world has evolved. Oil prices were rising rapidly in 1980, led by a spot market that producers and consumers viewed as out of control. Today, oil prices are falling, led by a well-accepted futures market. In 1980, US oil production had reached its peak and was beginning a long decline, while today, US output is rising rapidly towards a new peak that is years away and is reshaping global markets. China's oil demand was so low in 1980 that it was exporting 40% of its production. Today, China is the largest importer, in the world, having surpassed the US this year, making it the bellwether of global demand. One significant parallel, which has been a constant over the years, is that the Oil and Money Conference, as it is now, 35 years ago, Oil and Money remains the platform that draws elite leaders and thinkers, sharing their views and their insights. This year, it is our privilege to host an additional forum on Mexico's forthcoming and historic bid round. The Mexican government bid round briefing, which is at 4:30 p.m. tomorrow, will be an exclusive opportunity to meet key government officials and decision makers, who will openly address critical information needed to become active participants in the bid round prior to formal proceedings. At Energy Intelligence, our mission of being energy, geopolitical news, and analysis pioneers has helped us become the essential business source for supporting strategic decision-making. Our advisory services help companies and governments qualify opportunities and risks. As they have done for nearly 65 years, our team of journalists and analysts around the world strive to go beyond the news, to provide context, explanations, and implications, getting to the core and nuances of what matters in a way that only years of experience, skill, and a broad and trusted network permits. This year, Energy Intelligence led the way in projecting and identifying the Atlantic Basin crude oil surplus that has been the main driving force putting oil prices in a downwards trend in recent weeks. We closely tracked the imposition of oil industry sanctions on Russia by the West, assessing their impact on future investment, examining the risk scenarios for European gas supply. Our recent coverage of the oil industry's failure to control costs and schedules on mega projects underscores the critical problems the industry faces with managing spending and expanding reserves. These are among the key topics that we will be exploring over the next 2 days. Later today, we will be presenting the Leader in New Energy Award to Dong Energy. Dong Energy has changed from a midstream gas company to one of Europe's most coal-intensive utilities to a global leader in renewable energy over the past 10 years. Tonight, we will be honoring Emilio Lozoya of Pemex, who will be awarded the Petroleum Executive of the Year award chosen by his industry peers. At a crucial point in Mexico's energy history, securing passage of the country's energy reform that will open up upstream oil and gas projects to international investments for the first time in 75 years. But now, a solemn moment. We welcome Total's new CEO, Patrick Pouyanné, this evening to present the award to Mr. Lozoya. Over the last 16 years with Total, Patrick Pouyanné has held senior roles in exploration and production, to head of refining, and now taking over in its entirety what Christophe de Margerie, our dear fallen friend, was building. At this time, I would like for us all to take a moment to honor Christophe de Margerie, a longtime friend of Oil and Money, a Petroleum Executive of the Year winner, a pioneer of the Young Leaders Program and CEO of Total, but also as a personal friend of my father's and a mentor to me well before and after he became the energy statesman recognized by the whole world, whose life ended tragically Monday last week. He will be greatly missed. I would like us now to hold a minute of silence in memory of Christophe de Margerie's great achievements as a revolutionary mind and a leader of our industry. Thank you. It is now my pleasure to hand over to Stephen Dunbar Johnson, President International of the International New York Times.
Thank you, Lara. Your Excellencies, ladies and gentlemen, as Lara has suggested, navigating the shifting energy landscape, the theme of this year's conference, has actually been the constant theme throughout the 35-year history of this gathering. It is, in fact, shall we say, the raison d'être of this conference. But I think by any of the past 35 years' standards, this year's shifting landscape is perhaps the most challenging or interesting, depending on your perspective or disposition. There is frankly so much to unpack over the next couple of days. The lead, as we call it in the news business, has to be that whilst the price of oil is falling, the cost of finding it has not. The weak global economic outlook and the growing glut of supply suggest that we are unlikely to see a reversal of this anytime soon. As our partners, Energy Intelligence, have pointed out in their excellent reports, with most big projects or mega projects being planned around the assumption that oil would stay well above $100 a barrel, and with capital expenditure costs soaring due to the increasing technical difficulty of many projects, there is seeming inevitability that some will be put on hold or rethought altogether. Now, of course, playing into all of this, as ever, is the shifting geopolitical and social landscape, the strains with Russia, as Lara mentioned earlier, the emergence of the Islamic State. All of these things are making for a grimmer than ever outlook in the Middle East, not to mention the tensions in the Pacific and the ongoing Ebola epidemic in West Africa. And there is the issue of how these tensions might or will be further exacerbated by low oil prices. This raises particularly large questions about the prospects of the Russian and Iranian economies. In fact, there's a piece on our front page this morning about the effect of low oil on the Iranian economy. And as the New York Times columnist Tom Friedman commented last week, have no doubt this price fall-off serves US and Saudi strategic interests, and it harms Russia and Iran. And there is, too, the ever-present, vitally important issue that touches all of humanity, and particularly the poorest, climate change. It was notable to read, again in the New York Times last month, that the Rockefellers, a family that built their vast fortune on oil, announced that its foundation would be divesting from fossil fuel assets to invest in cleaner alternatives. The article went on to say that in recent years, 180 institutions, as well as hundreds of wealthy individuals, investors, have pledged to sell assets tied to fossil fuels. In all, the group and individuals have pledged to divest themselves of assets worth more than 50 billion from portfolios, the article claimed. Now, whilst this in itself is, I think, unlikely to have an immediate or middle-term impact on oil companies, it does suggest a speeding of this particular landscape shift, and a shift that will likely gain momentum as we head towards a call for further carbon limits in the run-up to the pivotal COP21 meeting in Paris next year. So the need to understand all of these dynamics, along with the consistent evolution of the building blocks of the industry itself, make this gathering ever more relevant each passing year, regardless of whether you are in the upstream, midstream, downstream, or financial areas of the energy industry. And all of these topics will be discussed over the next 2 days in what I think is a terrific program that has been put together with great skill by our partners at Energy Intelligence. And I would like to extend our very sincere thanks to all of our generous sponsors: Chevron, Total, Petrofac, ANH, Cemex, Schlumberger, Morgan Stanley, Gunvor, First Reserve, Bank of America Merrill Lynch, Weatherford, Barclays, Sierra Oil and Gas, Orange Nassau Energy, and the Carlyle Group. as well as our Leaders for Tomorrow sponsors, founding sponsor Total, lead sponsor Chevron, and sponsors Mercantil, Mubadala, Petrofac, Reliance, and Weatherford. The success of this event is as much down to the ongoing support of our sponsors as it is to the level of debate and discussion we have in this room and in the networking outside of this room. Finally, this year will feature the second Oil and Money Leaders for Tomorrow initiative, a program that identifies top graduates who have recently entered or are about to enter the oil and gas industry. The initiative provides these young men, and importantly in an industry with so few of them, women, with scholarships to attend the conference, enabling them to learn from the network with you, some of the industry's foremost and respected experts and leaders. One of the major inspirations, in fact, I think the major inspiration and supporters of this program was Christophe de Margerie. And indeed, as I mentioned earlier, Total is the founding sponsor. Last year, Christophe spent 90 minutes of his time on the sidelines of this conference with the recipients of the scholarships. It was Christophe at his garrulous, inspirational best. I recall he did as much listening as he did talking. I believe he was as genuinely interested in being connected to young people and new ideas as he was to world leaders. And I witnessed this not just here at this conference, but on many occasions in Paris. And it's how I will remember him. A giant of the industry, a man that had genuine curiosity and warmth for humanity, and an optimism in the future that was palpable and inspirational. But Christophe would be the first to insist we carry on and embrace the future. So with this spirit in mind, I will now turn to Peter Kemp to introduce our first session this morning. Have a very good conference, and thank you.